Ladies and gentlemen, Greg McCloskey from ForexLive.com, and I'm going to take a technical look at the dollar versus Swiss as we head toward the end of this week and into the new trading week. So let's get started. In trading week, the prices moved up for not five consecutive days, but we had our low on Monday, and that was the lowest price going back to July. And the high price was reached today. That high price today reached to the low of what is a swing area. That swing area is defined by a number of different lows going back through here. We broke below that level here and then returned to it through here before trading above and below it and finally basing against this level and moving to the upside. It wasn't until last month that the price came back toward this level and then broke below that level and used that level as resistance here before moving to the downside. So now we return back to the broken 61.8% retracement, but back to this swing area. And I want you to focus on this, or I want you to remember this 0.8838 level, because it's going to come into play on the hourly chart as well. But safe to say, and can you all see it, that if we get above the 88.38 level, that would open the door potentially for further upside momentum. That upside momentum would take ourselves back up to the 50% retracement of the same trading range and also near the 100-day moving average. So that would be our targets in next week. If we get above those levels, then it opens up the door even further with the 200-day moving average further ahead at 0.89551. Conversely, if the price is not able to get above this area, if we can't get above the 38 level, can't get above the 61.8, we look back down toward this swing area where we had swing low, swing low, swing low, trade above and below that level until before breaking to the upside and trading here today. So this swing area between 0.8738 to 56 would be the next target on the downside to get below. If we get below that level, then we'll look toward on this low price right here and all the low prices from trading this week. So that's the daily chart. Remember, 88.38 on the top side. On the downside, we need to get to below 87.37. It opens the door to the downside. Now let's take a look at the hourly chart. If we take a look at the hourly chart, what do we see? Well, you see this yellow area right here. This yellow area comes between 88.15, about where we stalled here today, and then 88.27. Just above that is 88.36. Remember the 88.38 level I told you to remember on the daily chart? Well, that comes into play as a 38.2% retracement on the move down from this high right here. This is the end of October, early November high to the low price that we saw, I guess, on the 1st of December. And what everyone knows is after we have a trend type move to the downside, what we'd like to see is a corrective move to the upside that gets above the 38.2% retracement. The fact that that 38.2 is right near the high of that top of the swing area on the daily chart, near the 0.8838, increases that level's importance, this level's importance even more. So in next week's trading, or today, if the price does move higher, we need to get above the 0.8838 level and stay above that level in order for the buyers to remain more in control. If they can't do that, then are they taking control? No, we would expect the price to move back down toward this swing area down here, or the 100 and 200 hour moving average, maybe down toward that 87.38 level that we were looking on the daily chart. That's what we look for, is that this is just a corrective move of what was more of a trend move to the downside, and we expect lower dollar. Conversely, we get above the 38 level, then it opens the door for further upside momentum when we look up toward the maybe the 50% retracement here on this hourly chart. Remember, and the 100-day moving average on the top side. Those would be our targets somewhere around the 89 level. So that's where we look to go. And if we get above that level, and we get toward the 200-day moving average up here. So this week is ending short of our key target on the top side near the 38.2% retracement, and respecting this swing area right through here. But in next week's trading, we have a decision to make. Are we going to get above that level, move to the upside, or is this just a corrective into resistance where we're going to move to the downside? That's what we're going to be looking for, the clues right at this level in next week's trading. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.